Very good morning, everyone. How are you all? Now, today we are here to discuss RTP November 2022 for CA Final Financial Reporting paper. Correct? Now, this time RTP they have given some good questions, included some new questions, however, related to the concept whatever we have done in what our previous batch. But there are some questions which require discussion. Okay, let us start from the beginning. We'll discuss each question. Correct. The first question they have given for Ind AS 101. Ind AS 101 means first time adoption of Ind AS. Correct. Let's see what the question has been given. On 1st April 2001, Newgen Limited had granted 1,20,000 share option to its employee with the vesting condition being a service condition as follows. Vesting condition, service condition means it is also related to share based payment. So share based payment means Ind AS 102. So some points are related to Ind AS 102 also. Vesting date 31st March 2002 means the grant date was 1st April 2001. Correct. Vesting date for first option is 31st March 2002 for 80,000 share option. 1 year vesting period since grant date means vesting period was only 1 year from grant date. Then vesting date 31st March 2005 40,000 share option, 4-year vesting period since grant date. Means you see we are doing question number 1. You can see grant date was how what 1/4/2001 for first year 31st March 2002 was the vesting day. Correct. This was grant day. For how many options? 80,000 share options. Then for second year, for second option it was 4 year. 4 year from grant date means this is become 31st March 2003, 31st March 2004 and 31st March 2005. So for 40,000 shares the grant date remains same but vesting date will become what? 31st March 2005. Understood? This point have you understood? When you draw you will better understand the question. Each option can be converted into one equity shares of Newgen Limited. The fair value of the option on grant date was 20. So they have given fair value. Fair value on grant date was how much? 20. Okay. So we know that equity shared options, whenever equity settled share based option, correct now, share based payment will be recognized at fair value of option on grant date. Correct? Yes, sir. Newgen Limited is required to prepare financial statement in days for the financial year ending 31st March 2004. Means 31st March 2004 means first Ind AS financial statement. This is the first Ind AS financial statement. So transition date will be what? Can you say this become the date of transition? Means on this date we need to prepare opening Ind AS balance sheet. Opening Ind AS balance sheet as per what? As per 101. As per Ind AS 101. And can I say for this period we need to give comparative figure for the previous year as per Ind AS only, and for this year we need to prepare what first Ind AS financial statement. Means 2003-4 will be the reporting period for which we are preparing first Ind AS financial statement. Yes, sir. Correct. This also we have understood. Now what they have given, the entity has disclosed publicly the fair value of both these equity instruments as determined at measurement date as defined in Ind AS 102. Okay. The previous applicable gap of the entity was IGAP. IGAP means as per accounting standard whatever we were dealing. And therein the entity had not adopted intrinsic value method. Means as per IGAP. So there was no accounting standard on share based payment, but there was one guidance note which used to deal with intrinsic value as well as fair value. Means both the options were given, but what they have given that as per previous gap the entity has not adopted intrinsic value method. Means can I say it means they have not recognized share based payment transaction, even though there was some ESOP granted, but they have not yet recognized ESOP in their financial statement. Yes, sir. The share option has not been the share option have not been yet exercised by the employee of Newgen Limited. Means till now no ESOP have been exercised. Correct? Yes, sir. How the share-based payments should be reflected in the books of Newgen Limited as on 31st March 2004, assuming that entity has add. What is the meaning of what? Add means there is some error. Error. Why there is some error? Because as per previous gap, they have not recognized the intrinsic value method for share-based option. Means they should recognize it, but they have not recognized it. There is some error in the financial statement. So, assuming that entity has add by not passing any entry for aforementioned transaction in the books of Newgen Limited on grant date, that is on 1st April 2001. First, on grant date, we don't pass any journal entry. Correct now? Means I think in question only they have given some mistake. On grant date, we don't pass any journal entry. During vesting period, we pass journal entry, means we recognize expense based on fair value of option on grant date. Correct. Of course, but there is some error. Means can I say, just try to understand. First, we need to understand what Ind AS 101 says. What Ind AS 101 says that if on transition date, means on or before transition date. So what is the transition date? What is the transition date? 31st March 2002. If the options are already vested, if the options are already vested, and if the options are unvested, correct? So can I say, in this case, in our example, 80,000 options are already vested and 40,000 options are unvested. What Ind AS 101 says? For Ind AS 101 says that options are already vested on or before the date of transition. On or before date of transition means on 1/4/2002. Correct? So you can see, as per the information given in the question, 80,000 options are already vested and 40,000 options are unvested. So for 80,000 options, they have given some option. They have given some exemption. Which exemption? Mandatory or voluntary? So they have given voluntary exemption. Means either they can apply Ind AS 102 retrospectively. Either they may apply Ind AS 102 retrospectively, or they can apply the carrying amount as per previous gap. Means SBP reserve may be recognized as per the previous gap carrying amount. Understood? So, or they may apply the carrying amount as per what? As per previous gap. So, this option has been given as per Ind AS 101 for only vested options. What is the option given? Either they can apply Ind AS 102 retrospectively, or they may carry SBP reserve as per the carrying amount of previous gap. For unvested option, that option is not available, means they need to apply Ind AS 102 retrospectively only. They need to apply Ind AS 102 retrospectively. Now in this question, just try to understand, if suppose these options is available, means entity may opt to not to apply Ind AS 102 retrospectively, means they will carry SBP reserve as per the carrying amount as per previous gap. But can I say, as per previous gap, they have not recognized SBP reserve? It means there is some error. Can I say, if there is some error that need to be rectified as per Ind AS 8? If we need to apply error as per Ind AS 8, means of course, can I say, in this financial statement, in this finance, we are preparing this year financial statement now. So in this financial statement, if you have not recognized any SBP reserve, so there is some error. And if there is some error, we need to apply Ind AS 8 by applying retrospective restatement. Retrospective restatement means what? We need to restate the opening balance of what? Opening balance at the beginning of previous year. So can you say, in this case, just try to understand, even though that option is available, but due to error, we need to do some retrospective restatement. Are you able to understand what I am saying? Correct? So in this question, why this question become very important? Because they have given Ind AS 101, Ind AS 102, and we need to also apply Ind AS 8. Why we need to apply Ind AS 8? Because in first Ind AS financial statement, because such transaction was not recognized, that become an item of error. If it is become an item of error, we need to apply retrospective restatement. Correct. So it means what will be the correct accounting treatment for 80,000 options. So for 80,000 options, as on which date? As on the date of transition means 1/4/2002. This become the beginning of previous year also. Beginning of previous year. We didn't recognize SBP reserve. But the 80,000 was the entire options. What is the fair value of options? 20 into 1 by 1 into 1 by 1. So how much? It is coming how much? 16 lakh. Okay, this 16 lakh will be recognized on 1/4/2002. On 1/4/2002, will pass one journal entry. Retained earning account debit to SBP reserve. How much? 16 lakh. 16 lakh. This point have you understood? Can I say this is due to Ind AS 8? Means as per Ind AS 101, we could have applied carrying amount as per previous gap. But as per previous gap, there was an error. Therefore, now we are applying Ind AS 8 by restating on a retrospective basis. Understood? Correct. Then for 40,000 shares, 40,000 options, can I say we need to apply Ind AS 102 retrospectively? Are you getting what I am saying? Retrospectively? Understood? Means first year will be what? 2001, 2002. First year will be 2001, 2002. So for first year, what will be your expense? Your expense will be what? 40,000. 40,000 into 20 into 1 by 4. 40,000 into 20 into 1 by 4. That is equal to what? 2 lakh. Can you say for this we need to pass one journal entry on the date of transition? Means this much SBP reserve should come in the opening Ind AS balance sheet. So what journal entry you will do on 1/4/2002? Retained earning account debit to SBP reserve. Retained earning account debit to SBP reserve. How much? 2 lakh. Retained earning account debit to SBP reserve 2 lakh. Means in the opening balance sheet, opening Ind AS balance sheet, retained earning will decrease and SBP reserve will increase. Correct? Yes, sir. Then, can I say for 2002-2003, this is our previous year. For the first Ind AS financial statement, so 2002-2003. This year also we need to pass one journal entry EB expense account debit to what? SBP reserve. Means can I say in previous year comparative financial statement EB expense need to be adjusted. Correct. Amount will remain same, only 2 lakh, because there is no changes in the number of options. There is no changes in the number of options. No option has been withdrawn. Correct. Then for current year means the year for which we are preparing India's financial statement, that is what? 3-4. In that year also will pass one journal entry EB expense account debit to what? SBP reserve, that is 2 lakh. Understood? This will be the entire adjustment. Have you understood this point? Any doubt? No doubt. And because they have given in the question that till now no option have been exercised, therefore we have not done any journal entry for exercise. Correct? Means only to inform you, suppose we are preparing Three balance sheet. One is what? On 1/4/2002, first India's financial, opening India's balance sheet. Then as on 31st March 2003, and as on 31st March 2004. Correct? बताओ. How much SBP reserve will come? SBP reserve. How much SBP reserve will come in the first India's, means opening India's balance sheet? So can you say it will be 16 lakh plus 2 lakh? 16 lakh plus 2 lakh na? That is 18 lakh. This will be 20 lakh. And this will be 22 lakh. Correct? Understood? Have you understood? This is extract of balance sheet. If you are preparing SOPL, SOPL, so we need to prepare two SOPL for what? 3, 4 and 2, 3. So can you see EB expense will come? EB expense will be 2 lakh and 2 lakh. 2 lakh and 2 lakh. Of course, can I say retained earning will also decrease in opening India's balance sheet. But because we don't have the information about opening retained earning, therefore I am not disclosing it. Correct? But of course, can I say retained earning will decrease by how much? 18 lakh. Will decrease by 18 lakh. This is decrease by 18 lakh. Understood? Any doubt? Simple. Let's see what the answer has been given. You can see for 80,000 share based option vested before transition date. What they have given? Ind AS 101 provided first time adopter FTA is encouraged but not required to apply Ind AS 102 to equity instrument that vested before the date of transition to Ind AS. Hence, Newgen Limited may opt for the exemption given in Ind AS 101 for 80,000 share option vested before the transition date. However, since no earlier accounting was done for this share-based option under previous GAP 2, therefore this led to an error on transition date as detected on the reporting date, that is 31st March 2004. Hence, being an error, no exemption could be availed by Newgen Limited on transition date with respect to Ind AS 102. Because there was an error, the question of availing option will not be there now. Correct? While preparing the financial statement for 2003-2004, an error has been discovered which occurred in the year 2001-2002. That is for the period which was earlier than earliest prior period presented. The error should be corrected by restating the opening balance of relevant asset or liability and relevant component of equity. Correct? Have you understood this point? Correct? This will result in consequential restatement of balance as on 1/4/2002, that is opening balance sheet of as on 1st April 2002, that only we have done. Accordingly, on retrospective calculation share-based option with respect to 80,000 options, Newgen Limited will create a share-based payment reserve of 16 lakh and corresponding adjustments to be done through retained earning, that only we have done. Correct? 40,000 share-based option what they have given, check करेंगे. Since the share-based option have not been vested before the transition date, no option as per Ind AS 101 is available. So for this no option is available, they need to apply Ind AS 102 retrospectively only. Correct. The entity will apply Ind AS 102 retrospectively. However, Newgen Limited did not account for the same on grant date, but no journal entry has been done. This will result in consequential restatement of balance as on 1/4/2002. Adjustment to be made by recognizing share-based payment and adjusted retained earning by 2 lakh. That only we have done. Correct. Further expense for the year ended 31st March 2003 and the share-based payment reserve as on 31st March 2003 were understated because of non-recognition of EV expense and related reserve. To correct the above error in the annual financial statement for the year ended 31st March 2004, entities should restate the comparative amount in the statement of PL. in the given case, the share-based payment reserve would be created by 2 lakh and EB expense would be debited by 2 lakh. That only we have done. For the year ended 31st March 2004, the share-based payment reserve would be credited by 2 lakh and EB expense would be debited by 2 lakh. This only we have done. You can see they have done the working for 40,000 options 16 lakh. Then sorry, for 80,000 options 16 lakh. Then for 40,000 first 2 lakh, 2 lakh, and then 2 lakh only. Yes, sir. Done. Means I will read the solution also so that you can understand the explanation is as per suggested solution or not. Got it? Any doubt? No doubt. Can we come to the next question? Next question is for India's 116. This is nothing but they have given lesser accounting. Lesser accounting, you remember? Accounting in the books of lesser for finance lease. You remember lesser can be manufacturer or non-manufacturer. Then I have said as per ICAI solution, whenever question is silent, we should assume manufacturer or non-manufacturer. If you remember, if question is silent, what we should assume? Manufacturer or non-manufacturer? Manufacturer, as per one of the question given in ICAI solution. However, I have said if time permit and question is silent, you can also give an alternative solution also. What will be the accounting treatment based on non-manufacturer? Let's see what is the question. Similar question was given in ICAI study matter. Only one point they have added, but similar point already I have taken in class. One of the example I have taken means in ICAI study matter, whatever question has they have given, they have not given initial direct cost. Then I have created one question in the class with initial direct cost. If you remember, in this question they have given initial direct cost. Means whatever example I create, they may also ask. Understood now? In this question you will find there is only one changes that they have given initial direct cost, which was not given in ICAI study matter. But similar question I have already taken in class by creating an example. Are you able to understand? A company manufactures specialized machinery. The company offer customer the choice of either buying or leasing the machinery. The company offer customer. Can you say once the word is customer, it means it is manufacturer only. The question is not silent. The company offer customer. Customer means what? Lesser is manufacturer na? अरे बोलना रे. Manufacturer or dealer. Non-manufacturer means they are financer. Are you able to understand? The company offer customer the choice of either buying or leasing the machinery. A customer chooses to lease the machinery. Details of the arrangement are as follow. The lease commences on 1st April 2001 and lasts for 3 years. The lease is required to make the annual rental payable in arrear, that is 57,500. But in arrear means what? At the beginning ki at the end? In arrear means at the beginning ki at the end? I have already said in class that in this chapter you can do only one mistake to identify whether lease payment is payable at the beginning or at the end. Most of the students do mistake here only. So in arrear means what? At the beginning or at the end? At the end only. Why you are confused? At the end. In advance means what? If they say payable in advance, then it is what? At the beginning. Normally student do mistake here only. This is danger point. Are you getting what I am saying? The lease machinery is returned to the lessor at the end of the lease. The fair value of machinery is 1,50,000, which is equivalent to the selling price of the machinery. The machinery cost means from the selling price of the machinery means understood they are manufacturer. We can understand they are manufacturer. The machinery cost rupees 1 lakh to the manufacturer. Now the question is not silent. Now the question is not silent. Understood? Means till point number 4 we were having doubt. But now they have given ki lesser is what? Manufacturer. Now if you apply non-manufacturer on accounting, 0 marks. Now your assumption will not prevail. And believe me, this student might do accounting based on non-manufacturer. Correct? Yes, sir. So lesser incurred cost of 2,500. This become initial direct cost. This was not given in ICAI study material. But already I have created one question to negotiate and arrange the lease. Understood? The expected useful life of machinery is 3 years. The machinery has an expected residual value of 10,000 at the end of 3 years. So this is expected residual value. The estimated residual value does not change over the term of lease. The interest rate implicit in the lease is 10.19%. The lessor classify the lease as finance lease. Thank you very much. How should the lessor account for the same in the books of account? Past necessary journal entry. First, my question, they have given ERV. ERV means what? Expected residual value. They have not given GRV. If GRV is not given, what is UGRV? Can you see GRV is nil? Guaranteed residual value. Remember? So UGRV will what? That too we also know it is unguaranteed residual value. I'm not asking the full form of UGRV. UGRV will be what? ERV minus GRV. But GRV is nil. So UGRV will be equal to what? 10,000. UGRV will be 10,000. Understood? Have you understood this point? Correct. Now what will be the accounting treatment? You will give or I will give? Correct. So we are doing question number 2. Correct. Now first, in the books of lessor as manufacturer, can you see they will recognize revenue at lower of what? Remember, at lower of what? Batao. Point number A, fair value of machine, fair value of leased machinery. How much? Fair value of leased machinery. How much? 1,50,000. Correct. Point number B, or what? Present value of lease payment. Present value of lease payment. Understood? When I say present value of lease payment will include GRV, but lease payment will not include UGRV. Correct? This point you remember. So present value of lease payment for 3 years discounted at market rate of interest. But market rate of interest is not given. I have said assume what interest rate implicit on lease is only what? Market rate of interest. Correct? So can you give what is the annual lease payment? 57,500 into present value annuity factor at a rate of 10.19% for how many years? 3 years. So can you give me 57,500 multiplied by what? 2.4786 is equal to what? 1,42,530 as per ICAI solution. Chalega? I'm taking figure as per ICAI solution. You can write on 20 in exam. Whichever is lower. So revenue become what? 1,42,530. Remember this point. Then we recognize what? Cost of sales. So what will be the cost of sales? Batao. Cost of sales will be carrying amount of asset or inventory, you can say. Carrying amount of asset or inventory minus what? Present value of UGRB. Remember? Minus present value of UGRB, because that is recoverable now. That is recoverable at the end. Correct. So what is the carrying amount is given? Cost price. How much cost price is given? 1 lakh. Minus what is UGRB? 10,000 multiplied by, can you give me present value factor at the end of third year? 0.747. It become 1 lakh minus what? 7470. So what is the cost of sales? 92,530. Correct? Understood? Now what is the date of transaction? They have not given date of transaction. As a 1st April 2001. So the on journal entry. Let us do journal entry. On 1st April 2001, what journal entry will do? First journal entry, lease receivable account debit to revenue, how much? 1,42,530. This is the first journal entry. Can you see we need to also recognize cost of sales? So cost of sales how much? 92,530. To inventory. Inventory will be derecognized. Inventory means machinery, na? You can say machinery is the inventory. What is the carrying amount? 1 lakh. And the difference will be UGRB. What is UGRB? 7470. So can you see this is also recoverable at the end? You will say this is lease receivable only. Lease receivable account debit 7470 means this is recoverable from lessee and this is recoverable from any third party. The total lease receivable will be equal to 1,50,000 only. Understood? Then one more journal entry. There is one indirect cost. Indirect cost. The difference between manufacturer and non-manufacturer means in case of manufacturer, indirect cost will be recognized as an expense on commencement date only. But in case of non-manufacturer, indirect cost will be included in lease receivable. If you remember, means if it is non-manufacturer now, the lease receivable will be inclusive of what? Initial direct cost. Indirect cost, not initial direct cost. Initial direct cost. Understood? This is a difference. But in case of manufacturer, initial direct cost will be charged to PL as an expense immediately on commencement date. Means we need to pass one more journal entry. Initial direct cost. Can you say because it is direct cost, you can including cost of sales also? Are you getting what I am saying? Means it can be inclusive in cost of sales. It is your choice. Or you can add on separately initial direct cost. Are you able to understand what I am saying? So I am just writing initial direct cost. How much? To what bank? Let us assume it is paid. Let us assume it is paid. Understood. Now ICAI has given one compound journal entry for this. So we can pass compound journal entry also. We can pass compound journal entry. What is the compound journal entry? Batao. Lease receivable account debit how much? 1,50,000. 1,50,000. Cost of sales will be how much? Including initial direct cost. 95,030. To inventory how much? 1 lakh. To revenue how much? To revenue how much? 1 lakh 42,530. And to bank how much? Means can I say we can do this journal entry, but why will do this journal entry? Separate journal entry is more correct, na? So ICAI has given this journal entry, but we can do separate journal entry also. Our choice, na? Correct. Now at the end of each year, can I say we need to recognize what? The finance income. So for that we need to prepare one table. Without table also we can do it. Correct. You want me to prepare one table, working note? You can leave some space for journal entry because they have asked journal entry at the end of each year. So we'll prepare one working note. Calculation of what? Calculation of finance income. So year end, correct. Opening receivable, remember? Then interest at what rate? Interest at what rate? 10.19%. Then lease payment, and then it become closing receivable. Year end 1 means 31st March 2002. What was the opening receivable? 1,50,000. Interest is how much बताओ first. Interest will be how much? 15,285. Lease payment is what? 57,500. Then how much? 1 lakh 1,07,785. Can I see this? You can continue. So this will be what? 1,07,785. Interest how much? Below 10,983. This is 57,500. How much? 61,268. 61,268. Interest will be balancing figure. Can I say this will be 57,500 and closing balance should be 10,000. That is UGRB. Closing balance should be equal to 10,000. That is UGRB. How much? Interest what? Balancing figure. Balancing figure how much? Give me balancing figure. It will be 6232. Correct. Can I this journal entry we can repeat for every year? What will be journal entry on 31st March 2002? Below. Lease receivable. Sorry, is received now. How much cash we are receiving? Cash account debit na. Cash or bank account debit 57,500 to finance income. How much finance income of first year? 15,000. The difference will be adjusted where? To lease receivable. How much? 42,215. Okay, same journal entry can be repeated for second year and third year. That you can do by your own. Correct. Now only one journal entry. Last journal entry. This much you understood? Now can you say lease receivable will come 10,000 closing balance at the end of third year? So at the end of third year, because that inventory is once again coming back to the lesser. Correct. So means inventory will be recognized at UGRB only. So at the end of the third year means 31st March 2004. We need to pass one more journal entry. Means after passing two more journal entry, this journal entry repeated for second year and third year. That you can do by your own. The last journal entry I am saying, it will be inventory will be recognized. Inventory will come back now. To lease receivable. How much? 10,000. This journal entry will come. Means can you see this will be inventory which can be sold at what? 10,000. Which can be sold at 10,000. Understood. Now on this we can apply Ind AS 2. Ind AS 2 means what? Cost price NRV whichever is lower. That information is not given, to be assuming NRV is what? Equal to 10,000. We are assuming NRV is equal to 10,000. Chalega? Understood. I hope good question. Similar question we have already done. You can see the solution if you want to see the solution. Can we see the solution? You can see they have given a compound journal entry. But I will say you can do compound journal entry or separate journal entry, your choice. Correct? Then they have given that table. Then they have given that year 1 journal entry, year 2 journal entry, year 3 journal entry. Then last they have given inventory account debit to lease receivable. Done. Let us come to the next question. Question number 3. Based on Ind AS 20. Once again this question I have said expected in class. Ind AS 20. Ind AS 20 maybe we have done one government loan, concessional government loan. So what Ind AS 20 says that whenever there is a concessional government loan, the loan will be recognized as per Ind AS 109, means at fair value of loan, and the difference between proceed and fair value loan will be equal to government grant, and that government grant will be recognized on a systematic basis over the period to match the necessary expense. Correct? Yes. So to encourage entity to expand their operation in a specified development zone, the government provide interest-free loan to fund the purchase of manufacturing equipment. In accordance with the development scheme, an entity receive an interest-free loan of rupees 5 lakh from the government for a period of 3 years. The interest-free loan, the market rate of interest for similar loan for 3 years is 5% every year, 5% per year. So it means market rate of interest will be the discounting rate of interest to find out fair value of loan. There are no future performance condition attached to the interest free loan. There is no future performance condition. If there is no condition, if there is no condition, can I say entire amount of government grant will be transferred to PL immediately? Because there is no future performance condition. If there is no condition attached, the entire amount of government grant will be recognized in PL immediately only. Right. Discuss how to account the above loan. Pass necessary journal entry in the entity's books of account for year 1 to year 3 as per relevant India. What will be the solution? You will do. We are doing question number 3. What is the loan proceeds? 5 lakh. From this we'll deduct what? Fair value of loan. So less fair value of loan. Fair value of loan will be present value of contractual cash. What? Fair value of contractual cash outflow during 3 years. So there is no interest, only principal amount will be repaid. So fair value loan will be 5 lakh into, can you give me present value factor at a rate of 5% at the end of third year? How much? 0.8638. How much it is coming? 4,31,900. Okay, sir. So what will be the government grant? What will be the amount of government grant? 60, 68,100. Correct. So this become government grant. So what journal entry we are doing at the beginning? What is the date? Date they have not given. Year 1 beginning. The first journal entry. How much loan we have received? 5 lakh. Correct. 2. Loan amount is how much? Bolo. 4 lakh means as per institute solution this is 4 lakh 32,000. Means they have done approximation. You can also take 4 lakh 32,000. Correct. 2 what? The grant, you can say grant and then transfer to PL. You can say PL account immediately. PL account means you can write on better write on this way. To grant income, to grant income na, and this grant income will be transferred to PL. How much it is? 68,000. Then can I say you can recognize interest expense in this by applying 5%. I will do, you'll do. You can do it by loan for 3 years. Then repayment entry you can do. Very simple now. Year 1, year 2, year 3. Interest expense will come by applying amortized cost. That you can do by your own. Correct? Let me explain. So in days 20, you can see what they have done. Same thing. Check kar lo. Correct. Same journal entry. Then year 1, they have recognized interest expense by applying EIR. Because there is no transaction cost, market rate of interest will be EIR. If there would have been some transaction cost, then you should think about that also. Correct. Same thing year 2, you can see finance cost, year 3 finance cost, and then payment of what? Liability. Super easy question. This is expected question. Can be asked in exam. Means already we have done this all questions, similar question in class. Ind AS 1, this question I like personally because I have done similar discussion in class about Ind AS 1. Means when I was discussing exceptional item under Ind AS 1. So what I said, the definition of exceptional item is not given under Ind AS. Therefore, we can take the reference of a accounting standard, and I have given the similar definition, AS5 definition. What AS5 says that any item of income and expense, correct? Any item of income and expense whose whose nature, size, and incidence are such that whose separate disclosure required in financial statement to understand the performance of the entity that become exceptional item. You remember? So what they have said, what is the question? As per the statutory requirement, exceptional item are required to be disclosed, means exceptional item are required to be disclosed, means as per schedule 3. Whereas Ind AS 1 has not used the term exceptional item, if you remember. But I said these items are known as exceptional item as per schedule 3 requirement. I have said similar thing in what? Class. Ind AS 1 requires separate disclosure of material item and how these are to be presented in the financial statement. Does that imply exceptional means material? Give example. So can I say all material item are not exceptional, but all exceptional item are material? Because what is the definition of exceptional item as per AS5? Those item of income and expense whose nature, size, and incidence. Nature, size means material, and incidence are such that, incidence means impact, are such that their separate disclosure is required to understand the performance of the entity. Means of course exceptional item need to be material, but all material item are not exceptional. Correct? How should this be presented in the financial statement? The theoretical question. Theoretical. First, you need to write down the meaning of materiality given under Ind AS 1. Then you need to write down the meaning of exceptional item not defined under Ind AS. So you need to give reference of accounting standard 5. However, in solution they have not given the reference of AS5. They said this is the exceptional item. Correct? Then you should give the examples of all the item which is required to disclose as per Ind AS 1. These are the item which require separate disclosure as per Ind AS 1. These are exceptional items. Let's see what the answer has been given. Check correct. The theoretical question you can read by your own. But very good question. I like this question personally. Exceptional item have not been defined under Ind AS. However, Ind AS 1 requires that where the item of income and expense are material, an entity shall disclose the nature and amount separately. So this is for material item. As per Ind AS 1, information is material. The omitting, getting, and obscuring it could reasonably be expected. You remember the definition of material? Obscuring, I said one new word has been added. Obscuring. Remember? Yes, remember. Okay. If you don't remember, read it. If omitting, misstating, or obscuring it could reasonably be expected to influence the decision of primary user of general purpose financial statement, correct? Now, on the basis of which the uh, which provide information to the for a specific reporting entity. Materiality depends upon the nature or magnitude of information, or both. It could be a determining factor. Then you can see the similar definition is given, what is given under AS5. So this definition is given under AS5 when item of income and expense within PL from ordinary activities are such size, nature, incidence, their disclosure is relevant to explain the performance of the entity. The nature and amount of such items will be disclosed separately. This is the definition given under AS5 for exceptional item. This is not given in Ind AS 1. Generally, item of income and expense fulfilling the above mentioned criteria are classified as and disclosed. From the above, it appears that all material items are not. In other words, exceptional items are those which meet the test of materiality, size and nature, and the test of incidence. That only I have said. Then these all examples are given under Ind AS 1 to be disclosed separately. But Ind AS 1 has not used the word. They say the following item requires separate disclosure. But we can say these are what? Exceptional item if it meet the test of what? Nature, size, and incidence. Understood? This all example already we have discussed where? Under Ind AS 1, if you remember. Understood? Theoretical question. I don't know whether this type of question will be asked or not. Because scope is not there for theoretical question in financial reporting paper. Now, India's 12, this is very good question. I like these questions personally, but from my point of view, in question and solution, there is one error. Let us discuss what is error from my point of view. Let us discuss. Following is the summarized statement of PL of Earth Limited as per India. This is totally new question. But you remember under India's 12 we have done this reconciliation, and I said reconciliation is very important for India's 12. You remember we have done some question on reconciliation, but this is a good quality of question. This type of question has not been given under India's 12 previously, so require practice. But if you know reconciliation, you can do it. Correct. Particulars revenue from operation, other income, purchase of stock in trade, change in inventory, employee benefit expense, finance cost, depreciation. First, you will not be able to understand this question is of which topic, because they have given SOPL. You will see this is what a question of what I don't know, but you will understand. But good question. Then additional information: corporate income tax applicable to Earth Limited is 30%. Other income include long-term capital gain of 10 crore, which are taxable at a rate of 10%. Other expense include the following items which are not deductible for income tax purpose. This permanent disallowance, penalties, impairment of goodwill, CSR expense. These are permanently disallowed. Correct. Whether CSR expense is also disallowed permanently as per Income Tax Act, I don't know. CSR expense is disallowed permanently. So now we'll go as per the information given in the question. You also don't know whether you have done directors, then also you don't know. Array, I am asking to you whether CSR expense is disallowed or not disallowed. Go and cross check, huh? Go and cross check. My God, what you are doing in the office. Other expense include research and development expenditure of rupees 8 crore, in respect of which 200 weighted deduction is available. So I have already said for 100% this is not permanent disallowed. 100% allowed both in accounting book and income tax. But 100% extra, can you see that is allowed permanently? So it is permanent allowance. Permanent allowance. Other income include dividend of rupees 4 crore, which is exempt from tax. So this is also permanently exempted. Profit before tax of 594 crore include agriculture income of 55 crore, which is exempt from tax. This is also permanently exempted. And profit of 60 crore earned in USA, on which Earth Limited is required to pay tax at a rate of 20%. So on this we are paying lower tax. 30% is our applicable tax rate, but as per USA agreement whatever, correct, now we are paying 20%. Depreciation as per income tax law is 25 crore, means we need to do some adjustment, depreciation as per book and depreciation as per income tax law. You can review a financial statement of Earth Limited, CFO multiplied PBT by income tax rate and arrive 178.2 crore as the tax expense, that is 594 into 30%. 594 is PBT given the question, and 30% this is what they are saying, this is a tax expense. However, the actual income tax expense appearing in the summarized statement of PL is 166.9. You can see in SOPL they have given current tax how much, this, deferred tax this is 166.9. Correct. So they want a reconciliation of that. You remember reconciliation of applicable tax and tax expense as per SOPL. But from my point of view, this is not correct. Let us cross check. Because first we need to understand how they have calculated current tax. However, if they ask reconciliation, so that calculation is not required because current tax is given the question. So we should assume that is correct only now. But only for our satisfaction, let us calculate current tax because all the informations are given. We are expert in calculating deferred tax. Let us calculate current tax and deferred tax. अरे बोलना रे. Correct. The CFO has sought the help of reconciling the difference between two tax expense amount. Prepare reconciliation containing the disclosure as required under relevant interest. This is Jabardast question. Jabardast. This question is beautiful. But it does not mean that we have not done this concept in class. I have already said whenever new questions come, if you have done in detail that concept, you can do it by your own. already we have done many questions on Ind AS 12. So let us, can we calculate current tax? Will you help me? You have no RTP with you? You don't have RTP? अरे बोलना रही. So we are doing question number 5. So the what is PBT given? PBT given how much? Let me open the question. 594. 594. Then plus permanent disallowance. Correct na? So permanent disallowance will be what? 1 plus 44 plus 6 how much? 51. Then minus permanent allowance. What is permanent allowance? 8. That research and development with 200 weighted reduction was allowed. So we are assuming that this is research expense only, because they have not given out of 8 crore how much research and how much development. So we are assuming this is research expense which has been charged to what? Books of account also. Correct now. That assumption when you take, where that information has not been given na. Correct. Then there is what? One, which income? Dividend income. Minus dividend income, because that is exempted na. Dividend income how much? 4. This is minus, this is minus. Then minus agriculture income. Agriculture income how much? 55. Then minus there is one long term capital gain, for which different tax rate will be applicable. So long term capital gain how much? And then minus there is one USA income, foreign income. Foreign income for which different rate of tax is applicable. How much? 60. Then plus depreciation as per books how much? 30. Then minus depreciation as per income tax how much? 25. I think all the information has been taken into consideration. Can you see this become taxable income at the rate of 30%? So this will be taxed at 30%. How much? How much? 513. Exact 513. So what will be the tax on this? 153.9. Can I say there is one long term capital gain also? Long term capital gain how much? So we'll apply the applicable tax rate on that. It is 10 crore ka. It is 1. Then there is one foreign income. Foreign income is what? 60 crore into 20%. How much? 12. It is coming how much? 166.9. So can this become current tax? Current tax. And you can see how much current tax they have given. Actually they have given wrong. Tax expense they have given as what? And that is one clerical error. Clerical error. One more mistake is there. Batao. We'll find out deferred tax. But the depreciation as per book is how much? Only one timing difference there, because they have not given carrying amount and tax base of asset. So we can use the concept of AS22. We can use the concept of AS22 na, because they have not given carrying amount and the tax base of, and therefore in class I have given you the concept of AS22 also. What is the depreciation as per book? What is depreciation as per income tax? So it means how much disallowed, means Can I say it can be understood in two ways? Can I say this is disallowed in current year, will be allowed in future? This will be disallowed in current year, will be allowed in future, but it is creation of DT or DTL? Huh? Disallowed, disallowed in current. So we are paying higher tax. In next year, we will paying lower tax. Tax benefit. So when it will be allowed, so can I say we need to create DTA? DTA will be 5 into 30%. 5 into 30% means what? 1.5. Or can I say in this way? The excess depreciation was allowed in last year. Correct? Are you getting what I am saying? For which now something has been reversed. It can be reversal of DTL also. It can be reversal of DTL also. But because no information is given, let us think about this only. DTA means DT income or DT expense? Income. But in SOPL, देखो what they have done. They have taken DT expense. Means current tax should be how much? 166.9. And deferred tax should be how much? 1.5. So tax expense should be how much? 165.4 na? 165.4. And we should do reconciliation with this. They have done reconciliation with this. Nalayak, Mahanalayak. And when we'll do reconciliation, our answer will match. Means we'll do reconciliation with tax expense na? And tax expense 165.4 only. This is the critical error in what? Question. But I don't know whether you can understand this much in exam or not. Means in solution they have done reconciliation with this. But we should do reconciliation with what? Tax expense now 165.4. This is a critical mistake in question. Are you able to understand what I am saying? Critical mistake in question. Chalo, let us do reconciliation. Reconciliation is very easy. So can you help me with the reconciliation? Reconciliation. This whatever we have done till now, that is not a part of solution. That why I have just informed you the question is not correct. Understood now? When I have read the question, so that time I am not the solution. But when I started reading solution, I become what happened is, so from the solution I understood there was some mistake. Correct? But what is accounting profit? 594.00 crore. You can add on rupees in crore. So what is the tax as per applicable rate? 594 into 30% is equal to 178 point. So this is tax as per applicable rate. Whenever there is a permanent disallowance or permanent difference, I will say, correct, or there is some lower tax rate, because of that reason, can I say tax as per applicable tax rate and tax expense will not agree, or there is some changes in tax rate from previous year to current year. You remember there are some permanent disallowance. Can you give me first effects of permanent disallowance of expense? What is the total expense disallowed? 1 plus 44 plus 6, है ना? How much? 51 into what? 30%. But because of this, when you have disallowed permanently, your tax expense will decrease or increase? Permanently disallowed na, so your tax expense will increase. So how much? 15.30 plus, this is plus na, then effect of permanent allowance of expense. So there is one permanent allowance of expense, that is research and development. How much? 18 30%. But due to permanent allowance of expense, your tax expense will increase or decrease? Decrease, to minus 2.40. Then effect of exempted income na. So there are two exempted income, dividend income 4 plus how much? 55 into what? So due to exempted income, your tax will increase or decrease? Will decrease. So how much minus I have already given? How much? 17.7. So this is minus, this is also minus. Then effect of different tax rate, correct? So lower tax rate, one is what? Long term capital gain. How much? 10 crore. Means as per applicable tax rate we have taken 30%, but actual tax rate 30%. Difference is what? 20%. So with 20% your tax will decrease. So into 20%, how much? 2. Decrease na. And there is one foreign income. Foreign income is how much? 68. 68 na? 60. So 60. We have taken how much? 30%. But as per USA, it is 20%. Difference is 10%. So 10% will decrease. Correct? I hope you are understanding. Huh? This is coming how much? 60 into 10%. How much? 6. Decrease. But what is the effect? And this will come to tax expense. If it is not coming to tax expense, we are doing mistake. 160. What is the tax expense? Our tax expense is what? 165.40. But as per ICAI solution, this is current tax. But from my point, this is tax expense only. So we have done reconciliation. Now this is only reconciliation. We reconcile with applicable tax with what? Tax expense. We never reconcile with current tax. We never reconcile with current tax. But देखो what they have done, nalayak. They don't know anything. In solution also, same thing they have done. But they have done reconciliation with current tax. They are saying this is current tax, and for deferred tax they are doing separate. Are why? This is bakwas na. This is bakwas. Reconciliation of deferred tax. What is reconciliation of deferred tax? Are you getting? This is bakwas na. Are bolna rahe? Have you understood? Now I don't know whether if the same question will come, how you should react in exam. The same question will come. The same question will come with error. So do as per ICAI solution. This must be you understood now. Means as per ICAI solution, this is current tax. And then they are once again giving 1.5 is deferred tax. Arwa. We'll do reconciliation with current tax or tax expense. So this is only tax expense. Deferred tax reconciliation is not required as per Ind AS 12. Understood? I hope you have understood. This was a good question with error, because it was a good question can be asked in exam. Correct? Come to the next part. Ind AS 34. This is what theoretical question. PQR is preparing its interim financial statement for the quarter 3 of the year. How the following transaction event should be dealt with while preparing its interim financial? Means they have given some information. So whether it can be deferred, whether it can be anticipated, we have done now. Ind AS 34 interim financial report. So that type of question, can you read the solution by your own? Correct. This is, you can do it by your own. I am not ready. Ind AS 41, good question. I have an easy question. They have given one question and they have asked you whether it meet the definition of agriculture activity. Do you remember the meaning of agriculture activity? Biological transformation. That is only one term. What was the meaning of agriculture activity? Bolo. Anyone who can recall the meaning of what? Agriculture activities. So agriculture activity means what? Bolo. It is a management by entity. Remember, it is a management by entity, correct? Of biological transformation and harvesting of biological acid for the three purpose. For three purpose. First is what? For sale of what? Biological acid. For conversion of biological acid into agriculture produce, or for conversion of biological acid into additional biological acid. Remember? Correct. This was the meaning of what? But there are two terms: biological transformation and harvesting. Means can I say whenever there is an agriculture activities, it should satisfy two conditions. One is of biological transformation, one is of what? Harvesting. Let's see. ABS Limited is in the business of manufacturing of beverage. Apple beverage, do you understood? Correct. Apple liquid juice. Correct. And require large quantity of apple to manufacture such beverage. In order to satisfy the requirement of Apple, it entered into 3-year lease contract with the owner of Apple orchards. Orchard means what? Apple farming. Correct. The lease contract are mainly of two types. Contract one: the owner of apple orchard, lesser, raises the apple tree to produce apple. Means they will raise apple tree. ABC Limited means the lessee make a fixed annual payment to the owner of apple orchard, who is required to cultivate the produce as per the specification of ABC Limited. Means who is doing cultivation? Lesser or lessee? Lesser. Lesser na? ABC Limited harvests the apple itself. Means lessee is only doing harvesting. Means can I say ABC Limited is not involved in biological transformation, and therefore it will not meet the definition of what? Agricultural activities. Because they are only involving in harvesting, not in biological transformation. Correct? Biological transformation is done by whom? Owner. And therefore this is not agriculture activities from the point of view of ABC Limited. Contract 2. ABC Limited obtained the apple orchard from owner, which they obtained apple orchard only from owner to raise apple tree. Now who is raising apple tree? ABC Limited. For subsequent harvest of the apple to ensure that apples are as per the requirement of ABC Limited, ABC Limited make fixed annual payment to the owner of apple orchard. So in this case, both biological transformation and harvesting is done by whom? Therefore, this is what? Agricultural activity. So they have said whether it is engaged in agriculture activity. Good question, new question, no question in ICAI study material. New question. For the first time, they have given some question related to what? Agricultural activity. Understood? The new question. I always say in class, whenever they will ask a new question, first they will give where? In RTP. So now this question become important question. Now if you don't read and these questions come, don't say out of syllabus. Huh? Right. In days 23, similar question we have in our book also. But let us do. Harish Construction Company is constructing a used building project consisting of 4 phases. Similar question we have. You remember? We have not done in class, but it is in self-assignment question. It is expected that full building will be constructed over several years, but phase 1 and phase 2 of building will be operational as soon as they are completed. Means they will become operational, means they will be ready for use. Following the details of work done on different phase of building during current year. You can see cash expenditure, building purchase, total expenditure phase 1, phase 2, phase 3, phase 4 given. Total expenditure of all phase 221. Loan taken is 200 crore. Loan taken at the beginning. Correct. After taking substantial period of construction at the mid of the current year. After taking substantial period of construction, one thing is clear, these are qualifying assets. At the mid of the current year, phase 1 and phase 2 have become operational. Means in current year, 6 months was capitalization period, and balance 6 months because it become ready for use. It is not a capitalization period. Means for 6 months interest will be capitalized and for 6 months interest will be charged to PL for phase 1 and phase 2. And for phase 3 and phase 4, because it is not yet operational, it is under construction, entire interest will be capitalized. Only the point is that, can you say this 200 into 15% is coming how much? What is the interest borrowing cost? 30 lakh. 30 lakh. Now the question is that this 30 lakh should be allocated to phase 1 and phase 2, and phase 3 and phase 4, how you will allocate? Because can I say 30 lakh, you can't say it will be means it will be allocated what? How you will allocate, batao? Can I say it will be allocated proportionately? It will be allocated proportionately. So what you will do? Phase 1 and phase 2, it will be 30 lakh. How much expenditure done? 34 plus 64, how much? It will be 98 divided by what? 221. And phase 2, phase 3 and phase 4, it will be 30 lakh into what? This plus this how much? 123 divided by 221. So proportionately it will be allocated. Can I say this interest expense will be capitalized entirely? But this interest expense 6 months, half will be capitalized and half will be charged to PL as an expense. This is given in the solution. Let us read. You can see 30 lakh, phase 1 98, phase 1 and 2 98 lakh, phase 3 and 4 123 lakh, total become 221 lakh. Interest for phase 1, in this proportionately they have done. Interest on phase 3 and phase 4 proportionately they have done. This has been allocated. Then out of this you can see half will be what? Capitalized and half will be charged to PL as an expense. However, for phase 3, phase 4, entire will be capitalized, and because this is work in progress, this will be debited to capital WIP initially, and once it is completed, this capital WIP will be transferred to what? Property, plant and equipment. This is only given, you can read. Correct. Understood the solution? But similar question we have in our book. In days 103, those similar question we have done in class, same to same question. I will read, you will understand. This is related to contingent consideration. You remember contingent consideration, if it is classified as equity, then initially on the date of acquisition it will recognize at fair value. Subsequently what will do? If contingent consideration is classified as equity, subsequently no measurement. And if it is classified as financial liability, initially it will be fair value on the date of acquisition, and subsequently remeasurement at fair value, difference will be transferred to PL. Same thing, similar question, same to same question we have done. How should contingent consideration payable in relation to business combination be accounted for initial recognition at its subsequent measurement in the following case? On 1st April 2001, A Limited acquired 100% interest in B Limited. Means there is no NCI. As per the terms of agreement, purchase consideration is payable in the following two tranches. Means part, an immediate issuance of 10 lakh shares having a face value. This is not fair value of rupees 10 per share. A further issuance of 2 lakh shares after 1 year. The profit before interest and tax for the first year following acquisition exceed 1 crore. This is fixed number of equity shares. The fair value of shares of A Limited on the date of acquisition is 20 per share. Means equity shares how much issued? 10 lakh into what? 20 means 200 lakh. And we need to find out fair value of contingent consideration. The management has estimated that on the date of acquisition, the fair value of contingent consideration is 25 lakh. So 25 lakh will be added. What is the purchase consideration? 225 lakh. During the year ended 31st March 2002, the profit before interest and tax of B Limited exceeded rupees 1 crore. As on 31st March 2002, the fair value of shares of A Limited is 25 per share. Correct. So whether you will do any subsequent measurement? No. Correct. Yes, sir. Now continuing in the fact pattern in A above except for, means they have given second case. In second case, it will be variable consideration. Is variable number of equity shares. Correct now. The number of shares to be issued after 1 year is not fixed. Correct. Where the A Limited agreed to issue variable number of shares having a fair value of equal to rupees 40 lakh after 1 year. Means 40 lakh will be total worth of equity shares. Means how many shares will depend upon the fair value at the time of issue, and that is already given 25 per share. Correct now. If the profit before interest and tax for the first year following acquisition exceed rupees 1 crore. So can you say purchase consideration in both cases will be same? Because fair value of contingent consideration in both cases is same. Only subsequent measurement will change. So you can see if I read the solution, because already we have done, you remember same question we have done in class. You can see for first case purchase consideration how much, 2 crore 25 lakh. For second case purchase consideration will be 2 crore 25 lakh. Means PCB remains same, but in first case because it is classified as what, equity. So in this case it has been classified as equity. There was no subsequent measurement. But in second case because it has been classified as what, financial liability, will do subsequent measurement. So initially it was 25 and settlement will be done at 40 lakh. So 25 minus 40, difference was 15. 15 will be transferred to PL. 15 will be transferred to PL. That is only given, check kar lo. 15 will be transferred to PL. But same to same we have done in class. I have said important also. Correct? Means some of the questions are new questions, some of the questions are same to same questions, some are only modified questions. The lesser whatever question we have done, that was modified question, lesser accounting. New question whatever is given, that you need to read, because same to same question can be asked. Correct? One more question. In DS 102, this question though I have done in class, I said I have taken this question from old syllabus, and same to same question. We have done one question of graded vesting. This question is also new question as per new syllabus. No question of graded vesting is given in ICAI study material. For the first time they have given, and I have taken same question. If you remember, I read, you will understand. The following particulars in respect of stock option granted by company: number of employee covered 400, number of options per employee 60, nominal value per share is 100, exercise price per share is 125, shares offered were put in three groups. You remember? Group 1 20%, 20% 60 how much? 12 shares with a vesting period of 1 year. Group 2 40% means 24 with a vesting period of 2 years. Group 3 40% means 24 with a vesting period of 3 years. Fair value is also same, whatever I have done in class, 10, 12.5, 40. Remember this question? I will show you this same question in my ICS, in my question bank. Whenever I am taking question from other source, it means that is important. Correct now? And we have done the same question in class. Do you want me to do it again? Kar lo na. This position on first year, number of employee left 40. Estimate of number of employee to leave in year 2 is 36. Estimate of employee to leave in year 3 is 34. So this is relevant for group 1, this is relevant for group 2, this is relevant for group 3. Employee exercising the option in group 1 is 350. You can see how many employee vested option? 360. Out of 360 employee, how many exercise the option? 350. I have discussed in the class whether we should recognize expense of 360 or 350. 360. Thank you very much. Even the vesting day and exercise, they are same. Remember this point. Position on second year, employee left 35. This is for group 2. Employee of estimate of employee to leave in year 3. This is relevant for group 3. Employee exercising the option in group 2 is 319. What is the actual number of employee? 360 minus 35 how much? 360 minus 35 how much? 3. Out of 325 how much exercise the option? 319. Then position on 30, employee left is 28. This is relevant for group 3 only. How many employee actually remain? 325 minus 28. Out of 297, how many employee exercise the option? 295. Option not exercised immediately on vesting, we have forfeited. Compute expense to be recognized in each year. So important account in the books of company. Can we do fast? If you can help me. बताओ. So we are doing question number 10. You need to help me, huh? We are doing question number 10. First year. Year end is what? First year. Year is not given. So first year. We do not year end working cumulative expense and expense. For group 1, how many employee will take? 360. Very good. Into what? 12. Number of option. Into what? Fair value is how much? 10. Correct now? Into 10 fair value of option of group 1. Into 1 by 1, how much? 43, 200. Group 2. It is 360 minus 36. It will be 360 minus 36 into what? 24. Into what? 12.5. Into what? 1 by 2. How much? 48, 600. Then 3. Yes, it will be 360 minus 36 minus what? 34. Into what? 24. Into what? How much? 14. Into what? 1 by 3. How much? 32, 480. So can I say expense will be this only 43,200, 48,600 and 32,480. What is the total of cumulative expense and this? C means cumulative expense, huh? E means expense. 124, 280. And this is how much? Arre, 10. Second year. Group 1 will not come. Group 2. Now what is the actual number employee? 360 minus 35. 360 minus 35 how much? 325. Into what? 24. Into what? 12.5. Into 2 by 2 how much? 97, 500. Then group 3, it is 325 minus what? 30. Into what? 24. Into what? 14. Into what? 2 by 3. How much? 66,080. Total. Can you give me total? 163, 580. Can you see expense will be this minus this and this minus this how much? 48,900, 33,600. Total 82,500. Then third year. Third. So now actual number implies how much? 325 minus 28. How much? 290, 297. Into what? 24. Into what? 14. Into what? 3 by 3. How much? 99,792. This minus this how much? 33,712. So this become what? Cumulative expense. This will become expense. I will do only year 1 accounting. So can I say we need to pay EV expense? EV expense, so you can do by your own. I will just do practice for year 1. Year 2, year 3 you can do by your own. SBP reserve account. We need to open SBP reserve account because they have asked you to open necessary account, two account, EB expense and SBP reserve account. EB expense very easy, EB expense to SBP reserve, EB expense to SBP reserve, EB expense to SBP reserve. कर लेना. Now first year 1. But the by EB expense how much? 124 to 80. Then can I say because group 1 option will be exercised. So out of how many employee who vested the option? 350, 360 employee vested the option, but 350 employee exercise the option. Means 10 employee does not exercise the option. For 10 employee it will be transfer retained earning. So how many exercise money will be received? For 350 employee into how many shares? 12. Correct? 12 is the number of options na? Like for group 1 is exercise na? Group 1, what is the number of shares? 12. Into what? Exercise price what? 125. How much? 5,25,000. This is year 1 only, huh? It will be 2 equity share capital. So it will be 350 into 12. What is the nominal value? 100. Nominal value is 100. How much? I always say that you can do mistake in premium. So to securities premium, it will be 350 into 12 into what? Can you say me what is the premium per share? Normally student do mistake here only. Premium per share. बताओ. What is the fair value of group 1? What is the fair value of option for group 1? Fair value of option. What is exercise price? Total become. What is nominal value? What is premium? You need to be careful about this. Correct. So 35, how much? 1 lakh? 47,000. Then we do transfer to retain earning some portion. For how many employed? 10 into 12 into what? What is the fair value of option? 10. How much? 1,200. And the balance, to balance carried down is how much coming? Check karo. $81,000. Now you can cross check. This should be equal to what? This plus this. If it is coming equal to this plus this means we are doing correct. However, securities premium can be taken as balancing figure also if you are smart enough to calculate that. But normally student do mistake where? Securities premium. Have you understood securities premium? Yes, second year, third year you can do it by your own. Second year, group 2 will be exercised. Third year, group 3 will be exercised. This is graded vesting. Once again I am saying new question. Now it become a new question. So it become important concept. Till now no question was in ICAI study material. For the first time they have given RTP. I have taken similar question from old syllabus. We have done in class. Understood? So from this attempt it become expected question. Previously I have never given in expected list. Now from this attempt it become expected question. Understood? Now in day 7, this is also interesting question. Very simple. In day 7 is cash flow statement. What will be the classification for following item in a statement of cash flow for both banking and banking of financial institution or other entity? So of course we know this. So but of banking and other, interest received on loan and advance given. For banking it will what? Operating. For other it will be interest received, investing. Then interest paid on deposit and other borrowing. For banking it will be operating. For other it will be financing. Interest and dividend received on investment in subsidiaries, associate and other entities. For banking, operating. For other, investing. Correct now. Then dividend paid on preference shares and equity shares including tax on dividend paid. But for banking, for other. Yes, dividend paid will be always what? Financing. Dividend paid on equity share capital and preference share capital which is classified as equity will be financing activity. Finance charges paid by lessee under finance lease. This we have discussed point number 5 and 6 under Ind AS 116, and I said at that time this is now important. You remember. The finance charge paid by lessee under finance lease means, can you say here paid by lessee? So here lessee is either banking company or the means the entity is what? Lessee. Entity is lessee. Correct. So finance charge paid by lessee under finance lease. Batao. Yes, for both it will be what? Financing activity. And payment toward reduction of outstanding financial liability. So this is nothing but repayment of borrowing. Repayment of borrowing will be also what? Financing activity for both. This is borrowing taken now. So for banking company, if they have taken borrowing, that will be financing activities only. Understood? Correct. Then interest paid to vendor for acquiring. This is important. 7 and 8. Good point. Interest paid to vendor for acquiring fixed asset under deferred payment basis. We remember deferred payment under India 16. So we said cost price will be equal to present value of future payment. Then we have to recognize interest on that. That interest will be borrowing cost charged to PL unless it is covered under Ind AS 23. It can be capitalized also. You remember? So on deferred payment basis, whatever interest you are paying, that will be what? Means it is one type of loan you have taken. Correct now. So this will be what? Finance activity. Financing activity. But principal sum payment, just try to understand. Suppose you have taken, you purchase a machinery, property, plant and equipment. If you purchase without deferred payment, you need to pay 100. But because of deferred payment, you are paying 10 rupees interest. So you are paying 110. So out of this 10 is to interest component. This will be financing. But 100 whatever you are paying, that is the purchase of what? Property, plant and equipment. So whatever 100 you are paying for principal amount, that is for purchase of what? Fixed asset. Any amount paid for purchase of fixed asset is what? Which activity? Investing activities. It will be investing activities. Have you understood this point? Hello. Have you understood this point? Correct. Then panel interest received from customer for late payment. Can you say operating? Panel interest paid to supplier. Operating. Interest paid on delayed tax payment. If question is silent, tax payment will be always what? Operating. So interest will be also operating. Interest received on tax refund will be operating. Then you can see the solution. Correct. Got it. In these 2 points were good. 5, 6, 7, 8. Apart from that, it was easy only. Correct. Yes, sir. Now coming to Ind AS 38. Simple question but interesting question. Once again, new question created. Correct. But simple. An entity has an intangible asset in the form of product protected by patented technology which is expected to be a source of net cash inflow for at least 15 years. It has been recognized in the books on initial date at rupees 12 lakh. This is cost price. The entity has a commitment from third party to purchase the patent in 5 years for 60% of the fair value of patent at that date it was acquired. Means when it was acquired, one commitment was received from a third party. that it can be purchased at the end of 5 years at what price? 60% of 12 lakh. And the entity intend to sell the patent in 5 years. Means what is the useful life? Intend to sell in 5 years means useful life is 5 years. And if you remember, we have done under India's 38, he always it will be assumed that residual value is nil unless a commitment is given by third party that he will purchase the asset at the end of useful life, or there is an active market. So we need to estimate what? Residual value. So in this case, can we assume that residual value is 0? No, we cannot assume that residual value is 0. So residual value is 60% of 12 lakh. So 60% of 12 lakh is how much? Whatever. Correct? Yes, sir. Company is amortizing the asset in 15 years, considering its residual value 0. Oh my god. Means first they have taken wrong useful life, then they have taken wrong residual value. Annual amortization charge to PL means as per their wrong treatment, what they have done, 12 lakh divided by 15. How much it is coming? 12 lakh divided by 15. So this is wrong amortization. State whether the accounting treatment done by the company is in accordance with India's 38. No, it is not. You write down the definition of depreciable amount. Depreciable amount means what? Cost minus residual value. Then you have to give the residual value as per India's 38. Residual value of intangible asset is assumed to be 0 unless there is a commitment by third party to purchase the asset at the end of useful life, or there is an active market. Then you need to also write down the meaning of useful life. Useful life is the expected number of period for which they can generate economic benefit. Correct? For which the asset can generate economic benefit. The useful life is 5 years. So as per our solution, it will be how much? 12 lakh minus what? Minus 60%, how much? Minus 60% divided by 5. What the answer is coming? How much? 96,000. Let us check the answer once what they have given. You can see question 12 we are in. Useful life is defined as a period over which the asset is expected to be available. The number of production of similar unit expected to be obtained. In the instead case, the entity expect that asset will be available for use for 5 years. Useful life is equal to 5 years. For residual value, India's 38 says that the residual value of intangible asset with finite useful life shall be assumed to be 0 unless there is a commitment or there is an active market. The depreciable amount of asset with finite life is determined after deducting residual value. A residual value other than 0 implies that entity expect to dispose of the intangible asset before the end of economic life. Correct? Then they have given, you can read, same answer is coming 96,000 per annum. Good question, but you need to write down as with by giving reference of India's 38. If you are only doing calculation, they will not give marks now. Correct? Yes, sir. Have you understood? Any doubt? Whenever they say state whether the accounting treatment is correct or not, mean this is a question of analysis of financial statement chapter. Whenever they state whether the accounting treatment is correct or not correct, you need to give reference of India's and write down as per India's 38 all the points. Then only you will get mark. When they say calculate, then you should do only calculation. But when they say state whether the accounting treatment is correct or analyze whether the accounting treatment is correct, it means you need to give reference of India's. Entire thing need to be written. And if you are not writing, you are only calculating, then you will not get mark. Understood? So this is actually a question of analysis of financial statement, which we have done last chapter. You remember? Correct? Then India's 1 and 5. Similar question we have done in class. Good question. You remember that one question we have done for uh, option given to purchase an additional item. Means when you purchase any item, correct? So one option will be given to the customer. With that option, you can purchase additional item in near future at a discounted price. That is known as customer loyalty program. Remember, we have done one question also on that. Correct now? Remember? So that question. A Limited own 20 resorts across India. Every customer who stay in any of the resort owned by A Limited is entitled to get points, award points, on the basis of total amount paid by him. Under this scheme, 1 point is granted for every 100 spent per stay in the resort. As per the past experience of A Limited, the likelihood of exercise of point is 100%. Means they are saying that 100% points will be redeemed. And the standalone price of each point is rupees 5. Means this is the fair value of each point. Standalone selling price of each point. Customer expend 10,000 in one of the resort. What is the accounting treatment of this point? बताओ. So we are doing question number 13 ना. बताओ. What is the sale value? Sale value is given 10,000. So how much points awarded? When you calculate points awarded will be what? It is 1 by 100, means 100 points, 100 awards point. What is the standalone selling price of award point? It will be 100 into 5, that is what? 500. And what is the standalone selling price of what they have sold? Means the whatever service they have given. Correct now. The standalone selling price is 10,000. Means total standalone selling price is 10,500. How much is the transaction price? The transaction price will be allocated to what? The sale of service or goods, whatever, and what? Award point. So what is standalone selling price? It is 10,000 and 10,500 na. And what is the transaction price? Transaction price is 10,000. So this 10,000 will be allocated in this ratio. Can you allocate? We have done better question than this. This is very small questions. We have done better question than this in class. So how much it is coming? 9524476. So what will be Jana entry? But how much consideration we have received? 10,000. Out of this, how much revenue will be recognized initially? 9524. And what will be the deferred revenue? Or you can say liability under customer royalty program. Remember? So we can say deferred revenue also. How much deferred revenue? And this 476 will be recognized when the points will be redeemed, or in the year in which it is expired, whichever is earlier. So this will be recognized as revenue in the year in which it is redeemed, or in the year in which it is expired, whichever is earlier. Remember that point? Simple. Easy. Correct. Then coming to India's 105 question. This question, I will say, pata nahi why they have given this question. From my point of view, bakwas question. Correct. No relevance. When I read the question, I was thinking, what is this question? When I read solution, I said this part. Correct. Now, bakwas question. Company A has financial year ending on 31st March 2000. On 1st Jan 2000, the company has classified its division B as held for sale in accordance with India's 105. How property, plant and equipment for which company has adopted cost model shall be measured immediately before the classification date as held for sale on 1st June. So can on 1st June up to 1st June, we will apply India 16. We apply cost model. We will charge depreciation up to that date, and depreciation will cease after that. This is the answer. Answer you understood? Means in question only answer is given. Means up to 1st June, means after on 1st June we will apply India's 105. Up to 1st June we need to find out carrying amount as per what? India 16. and depreciation will cease from the date when it is classified as what? Held for sale. This is the solution. Okay, you can read the solution. This Ind AS 37, this is a good question. Very interesting question, but theoretical questions. Let us read what they have said. SBCL manufacture heavy equipment for construction industry. An order for supply of 90 equipment was received from ABIL. The unit price of equipment was agreed at 190 lakh each. 64 equipment was supplied during 2001-2002 and the balance quantity remaining to be supplied on 31st March 2002. SBCL has 5 equipment inventory in its inventory as on 31st March 2002. Means how much inventory is not there? Out of 90, how much already supplied? So how much remain? 26. How much is in the inventory? 21. There is no such inventory. So can the contract become what? Contract become onerous. Contract become onerous because they need to supply on this date only now. And if they have not manufactured such quantity as on that date, so that contract become onerous. Whenever contract become onerous, we should create a provision. We should create a provision for what? The at an amount which will be lower what? The unavoidable cost of meeting the obligation and penalty to exit from the contract, whichever is lower. Correct. HBCL considered that contract was an onerous contract. Thank you very much. Lo, pura masala khatam. This is only we need to find now. This is an onerous contract, understood? And therefore NRV has been taken as the value of inventory on 31st March 2002. Means inventory were valued at NRV. Correct. The management of SBCL contended costs incurred toward administrative overhead, finance charges, and research and development expenses, and sales overhead, and headquarter expenditure, etc., are considered as period cost and hence not considered for creation of provision. Just try to understand when you are saying unavoidable cost. So unavoidable cost will be which cost? The incremental cost, or which are the costs which will be incurred even though the asset is not manufactured. Now, once again, try to understand whatever I am saying. When I am saying we need to create a provision with an amount equal to unavoidable cost, means which cannot be avoided. There are two type of cost. One is known as incremental cost. Incremental cost means those costs which will be incurred only when you manufacture such goods. Correct? When you manufacture such goods, na? Are you getting what I am saying? Correct. And there are some costs which will be incurred even though you are not manufacturing. So can I say if you are incurring such costs even though you are not manufacturing, that should not be considered now. That is not incremental cost. When you are creating provision, you should create a provision with which cost, which are incremental costs and which cannot be avoided. Which cannot be avoided. This selling and distribution cost, research and development expense, finance charge, administrative expense, can I say will be incurred even though goods are not manufactured. So these are not incremental costs. These are not incremental costs. Therefore, this should not be considered for creation of provision. Correct only. Means the statement given by management is correct. Correct. And the same has not been included in the computation of unavoidable cost. Thank you very much. Correct only now. The management of HBCL has submitted a details of cost that have been considered for creation of provision toward onerous contract. Material cost will be considered because incremental cost you can read if you want to read. Labor cost will be considered because these are also incremental costs. And can I say there are some material overhead. Overhead will be also considered which are specific to that construction, that manufacturing. Means include salaries and other expense, including expense allocated over other department, booked under department link with material like purchase, stores and quality control. Means there are some overhead which are specific to that what? Manufacturing, that will be also taken into consideration. Accordingly, provision has been made considering the above cost only. Correct only. The value of provision created for 21 remaining equipment. This is also correct, to be produced as per the working shown below. So cost of production they have given 199 per unit. By taking this cost only, this is cost, unavoidable cost. This is unavoidable cost now. Means even though cost has not been incurred, but now because it become onerous, we should create a provision for that. Are bolna re? So this become unavoidable cost. Normally we don't create provision for this. Any manufacturing which are under work in progress, will you create any provision for expected cost? No. But for this we need to create provision. Less can is from this will deduct NRV of inventory, selling price of inventory, because we can sell it. So selling price is 190. So can I say we should create a provision for this, because cost is more than what selling price. Cost is more than selling price. Correct? Understood. And they have not given any penalty. So they have not given any penalty. Ignore. Means can I say we should create a provision of 9 for how many unit? 21. 21 into 9, 189. Is, I will say, solution is given in question only. Whether the company's accounting treatment for cost of creation of provision to a onerous contract is aligned with the provision. Now you need to prove yes. But how the answer is given? Let us see. So this is a new question, totally like down super expected. Question number 15. As per India's 37, onerous contract is a contract in which unavoidable cost of meeting the obligation under the contract exceed the economic benefit expected to receive under it. This we know. The unavoidable cost under the contract reflect the least net cost for net cost of existing, sorry, net cost of exciting existing होगा ना, from exiting from the contract, which is lower of cost of fulfilling it, and any compensation for penalty arising from failure of fulfilling it. Means simple, in simple word, the provision will be lower of what? Unavoidable cost or penalty, whichever is lower. India's 37 provided amount recognized shall be the best estimate of the expenditure required to settle the present obligation, which is the amount that entity would rationally pay to settle the obligation at the end of reporting period or to transfer it to third party at that time. This best estimate. In case of onerous contract, amount that the entity would rationally pay to settle the obligation would be lower of compensation or penalty arising from failure to fulfill the contract and excess of unavoidable cost of meeting the obligation under the contract from the economic benefit expected to be received under it. As per India's, that is when the cost of fulfilling the contract comprise the cost that relate directly to the contract. The cost that relate directly to the contract will be incremental cost of fulfilling the contract, incremental cost of fulfilling the contract, and allocation of other costs that relate directly to fulfilling the contract, means any other overhead which are directly related to that contract, that only we have taken. The unavoidable cost of meeting the obligation and the contract, only those that are directly variable with the contract, do not include allocated or share cost that will be incurred regardless whether the entity fulfill the contract or not. Means any cost which will be incurred even the contract is not fulfilled, that will not be considered. Is selling and distribution admin cost will not be considered, and any cost will be incurred which cannot be avoided by entities in future actions is unavoidable cost. I think you have understood. देखो, accordingly SBCR has correctly measured the cost of creation of provision for onerous contract by considering the material cost, labor cost and material overhead. Further, HBCI is correct that period cost will not be considered for measurement of cost for the purpose of creation of provision on onerous contract, as they do not relate directly to fulfilling the contract. Understood. The new question. can be asked. But can I say solution is given in the question? This type of questions are dangerous, huh? You will not be able to understand what to write. So this become MRQ question, must revise question before exam. Now, come to next point. How many questions are left? This Ind AS 2 and Ind AS 16. Very simple. Already we have done in class. A retailer company imported good at a cost of rupees 1,30,000, including 20,000 non-refundable import duty and 10,000 refundable purchase tax. So whether 20,000 will be a part of cost? Yes. Whether 10,000 will be part of cost? No. Means can I say 1,30,000 include this to means actually purchase price is 1 lakh. In this only will add 20,000. Will not add 10,000 because it is refundable. The risk and reward of ownership of imported goods were transferred to retailer company upon collection of goods from the harbor warehouse. The retailer company was required to pay for the goods upon collection. The retailer company incurred 5,000 to transfer the goods to its retail outlet. Means any transportation cost from where is it from their warehouse to retail outlet, whether it will be added. Means retail outlet is from where you are doing selling. So any transportation cost from, let us assume factory, let us take factory, or from what, head office, from head office to retail outlet, whether that will be added? Yes, it will be added because this has been incurred to bring the asset in what, available for sale now. Till you bring the asset inventory for available for sale, whether it can be sold, it cannot be sold now. This is not selling and distribution expense. This is a transportation cost of bringing the inventory in warehouse. Means any directly attributable cost for bringing the inventory in present location of sale, that will be added now. So this will be added now. So 5,000 will be added, and a further 2,000 is incurred in delivering the goods to his customer, whether this will be added? No, this is selling cost. Further selling cost of 3,000 were incurred, this will also not be incurred. Means 2,000 and 3,000 will not be added. Means it become what, how much? 1,25,000. Super easy. Super easy. State whether delivery charge and selling expense will form part of the cost of inventory. If not, then why? Also calculate cost price of inventory. You can do it by your own. Read solution. Correct. This point number 2 is a very good question. First, I will inform you that I have done. Because if I will not inform you, you'll forget. Let me come to that point. First, I am just informing you that where we have done this point. Right now, it might happen you have forgotten. Where is India 16? Yeah. India 16 may we have done cost price of property, plant and equipment include purchase price. Include purchase price. Include directly attributable cost. And also include what? Initial estimated cost of dismantling and removing the item or restoring the site where it has been located. Then we have discussed that it will be capitalized only if the obligation has been incurred when the item of PP was acquired or during the period when the item is used. If the obligation is not incurred, then it will not be capitalized. Obligation can be legal or constructive, I think. But then one note I have given. An entity applies Ind AS to inventory to the cost of obligation for dismantling, removing, restoring the site on which it has been located that are incurred during a particular period as a consequences of having the item to produce the inventory during that period. Means suppose this is the area where we are doing production of some goods, correct? And we have done some alteration in this premises, and this alteration is required for production of that goods. Are you getting? So this is initial estimated cost we need to find out because this alteration need to be demolished. So there is some demolition cost. but this demolition cost is required for protection of for property, plant and equipment. Protection. Therefore, can I say that this will be the initial estimate cost of removing or dismantling or restoring the site on which it has been located will be added to the cost price of inventory. You remember that point? And believe me, they have given a question based on this. It is so above my expectation also. Means I have also not expected that this type of question they will ask. This is beyond my expectation. And they started asking this type of question. Nah, it means they want to kill you. It means they want to kill you. I don't know whether you can retain this much point or not. Are you? And believe me, they are not asking this type of question in exam. They are giving in RTP, but they are not asking. Are you getting? Let's see what the question. Company A incurred 20,000 for as cost of restoring the site on which the item of PP was located. This item was used for manufacturing of the goods and the requirement for restoring will arise due to manufacturing orders. Will the treatment of 20,000 in the books of what will be the treatment? Analyzed on the basis of provision. So you will say it will be capitalized to the property, plant and equipment. You will say if you do not retain the point, but it will be added to what? Cost price of inventory. Understood now? We have done the points, but the point is that can you retain? Can you retain this point? This is actually CA final exam. If you can retain, okay, but they are not asking this type of question. Believe me, they are not asking. Correct. India's 33 similar question we have done in class. Similar. And I will say in class so we have done better question than this. If you remember India's 33 earning per share, let us do. Company S is a subsidiary of Company P. Following facts are in respect of Company S. Company S has 10,000 ordinary shares and 1,000 options outstanding, of which Company P own 9,000 shares and 500 options. You remember similar question we have done? The options have an exercise price of 40. The average market price of Company S ordinary shares is 50. You remember why they have given? To find out dilutive component in options. So how to calculate dilutive component? Remember? Means 500 options. Now from this we'll minus 500 into what? What is the exercise price? 40 divided by 50. How much it is coming? Oh sorry, 1000 options. 1000 options. So how much it is coming? 800. So what is the dilutive component? So can I say this is potential equity shares? Means this is the number of shares which will be issued at no consideration, and these are the number of shares which will be issued at fair value. So any number of shares which are issued at fair value are not dilutive. Any number of shares which will be issued at no consideration will be dilutive. So out of 1000 only 200 is dilutive. Remember this point. If you remember, okay. Company S profit is 30,000. So S so we can do easily. Let us do S. We are doing question number 17. Let us do basic earning per share first for subsidiary. What is the profit given? 30,000. And what is the ordinary shares outstanding? 10,000. So it become how much? 3 rupees. What will be diluted earning per share? Okay, 30,000 for options. So no effect in numerator. But it will become 10,000 plus what? 200 is equal to what? 2.94. Subsidiary to easy. Correct. Now we need to come to following facts are in respect of company P. Company P has 5,000 shares outstanding, and you can see company P parent company does not have any potential equity shares. Company P does not have any potential equity shares. Correct. In 2001, company P profit excluding any distributed and undistributed earning of subsidiary was 7,000. The options outstanding are dilutive at P's level. Arey, nalayak. Option outstanding are diluted by P means for consolidation. Means they are saying in consolidation. What they are saying? Bakwas point. Means options are outstanding at what? Options outstanding are dilutive at subsidiaries level, na? I don't know why they have given this point. Bakwas point. Because for company P it is an investment. It is not a potential equity shares. Are you able to understand what I am saying? And can you say consolidated financial statement equity instrument of subsidiary will not come? In consolidated financial statement where the equity shares of subsidiary company will come? No, na. So options will also not come. Are you able to understand what I am saying? Are bolna re. Correct. Determine diluted earning per share of company P. They have asked only for company P, only diluted earning per share. But we have done for subsidiary also. So for parent company, what will be the diluted earning per share they have asked? First, let us calculate basic earning per share. Even though they have not asked. So basic earning per share will be what? This is 7,000. 7,000. How much shares they hold? 9,000. So 9,000 into 3 will be added. 9,000 into 3. अरे बोलना रे. This will be added in the consolidated PL or not? Means we'll take only profit which are attributable to the owner of parent company. Will not take any profit which are attributable to NCI. So out of 10,000 shares, 9,000 is held by whom? Parent company. 9,000 to 3 will be added now. अरे बोलना रे. Divided by what? 5,000 is equal to what? 6 point. This is parent company basic earning per share in consolidated financial statement. Huh? Whenever they ask of company P, to calculate in consolidated statement only. Now, actually they have asked what? Only diluted earning per share. So diluted earning per share will be what? Can I say? Will you start with 7,000 only? Correct. Now can I say diluted earning per share is 2.94? So can I say now we'll take 9,000 into what? 2.94. But they have some warrant also. How many warrants they are holding? Just try to understand. For 1,000 options, what is the potential equity shares? 200. So for how many options are held by parent? So for 500 options, how many options will be dilutive? 100 now. So you should take 100. Are you getting what I am saying? It will be 100 into what? 2.94 divided by what? 5,000. Pen is not working. Let me change the pen. Have you understood what I have said? I said for 1,000, it is how much? 200. So for 500 is how much? 100 potential equity shares. This now I hope you have understood. Now this 7,000 will be increased by diluted earning of subsidiary company. So 9,000 is the ordinary equity shares hold into what? 2.94 plus what? 100 into what? 2.94. And number of ordinary shares remains same. That is 5,000. Correct? Now batao. What is the answer? 6 point. What is the answer given? Check karo. Have you understood? Let's see the answer. 2.94 they have given diluted earning per share of subsidiary company, and then they able 6.75. This we are doing correct. But can you do working note in this way? Is plus 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 you inform. Do a working note for numerator. So this question will come. So this question will be minimum 8 marks. Good question now, because most of the student will not be able to do it. Most of the student will not be able to do it if they don't revise. But very simple question, and already we have done better question than this. In our question, so there was preference shares also. Convertible preference shares in the books of parent company hold by what? Sorry, in the books of subsidiary company hold by parent company also. Similar question we have done better than this. Remember that question? We don't remember, but chalo theek hai. Chalo. This also we have understood. This question is the very easy but good question. In AS 109. On 1st April 2001, an entity granted an interest-free loan of rupees 5 lakh to an employee for a period of 3 years. The market rate of interest for similar loan is 5% per year. It means, can I say it is a concessional loan given to employee? You need to first find out fair value loan. Any difference will be recognized as a prepaid expense which will be amortized during the life of the loan, that is 3 years on a straight line basis. On 31st March 2003 means after how many years? 2 years, na? Means at the end of second year. Because of financial difficulties, so because of financial difficulties of other party, the amount is not receivable. It is indication of what? Means in the books of entity is a financial asset. So it is an indication of impairment. Financial defective means there is an objective evidence of impairment. Whenever there is an objective evidence of impairment, we are in stage 1, stage 2, stage 3. Stage 3. Remember? Understanding stage 1 means when the credit risk has not increased significantly from initial recognition. Stage 2 when the credit risk has increased significantly from initial recognition but there is no objective evidence of impairment. Stage 3 when there is an objective evidence of impairment, it become credit impaired financial asset. Remember? The employee asks to extend the interest free loan for a further 3 years. Some negotiation has been done. There is some modification. Correct? The entity agreed. An entity agreed also. Under the restructured terms, the repayment will take place on 31st March 2007. However, the entity only expect to receive payment of 2,50,000 given the financial difficulty we employ. Initially, it was how much? Now 5 lakh become 2,50,000. So impairment, we know what is the cash flow which we are expected to recover. We know how much cash flow which are not expected to recover. We can find out impairment loss. Impairment loss will be charged to PL immediately. Explain the accounting treatment of initial recognition of loan after giving effect to the changes in the terms of loan as per Ind AS 109. Support your answer with journal entries and amortized cost calculation as on the date of initial recognition and as on the date of change in the term loan. They have asked everything. Can I do with solution? Or you want me to do the solution? Huh? This solution you can understand. So, first, we'll find out what? The fair value of loan. So fair value of loan will be what? We are doing question number 18. बताओ fair value loan will be 5 lakh into what? Present value factor at the end of third year discounted at 5%. Can you give me how much? 0.86 4,31,900. Difference between these two is how much? 68,100. Means this will be prepaid EB expense and this will be what? Loan amount. What journal entry will do? Loan receivable 4,31,900, prepaid expense 68,100 and to bank. That is only given. Now can you see, we'll calculate interest expense on 4,30,000 for 2 years. For that we require amortized cost table. So we can prepare amortized cost table. They have done that, only check karo. You can see that. So this is the interest expense of first year and second year. You can pass journal entry for this. Can you see, this will become carrying amount. This will become carrying amount of loan at the end of second year. Now we can find out due to modification what is the carrying amount of loan, because now 2,50,000 will receive after 4 years, because the term was extended for another 3 years. So 1 year is expired, extended by 3 more years, the 4 years. So can you give me 2,50,000 into rate of interest remains same na? Means it will be discounted by original EIR only. Whenever there is a modification, use what means whenever there is an impairment, use original EIR. If you remember, in case of impairment, we use always original EIR. What is the original EIR? 5%. Can you give me? Into what? How much? 2,50,000 into for 4 years. Bolo? No, no. 4 years. Present value factor I am asking. 0.8227. How much it is coming? 2,05,000. As per they have given 750. I am also taking 750. Correct. Now this is the carrying amount, and this is now the restated amount. The difference will be impairment loss that will be charged to PL. The difference will be impairment loss now. They have said as a result of modification, the present value of estimated cash flow is recalculated at 2,05,750, and the difference will be 2,70,530. That will be impairment loss charged to PL. But journal entry will do PL account debit, means impairment loss account debit to financial asset, loan receivable. And now can you see this will become new amortized cost? Now on this you can calculate interest expense for how many years? 4 years. By applying which rate? 5%. Good question, but good question, because impairment loss still not asked in exam. I have said in class also impairment loss not asked, expected question, and they have given in RTP. However, in previous RTP also they have given question on impairment loss, but for impairment loss in exam they have not asked question. The scope is not there. Now India's 109 is so big chapter, they can ask only one or two questions. The scope is not there. Whenever they want to ask, they see that if the student let us ask simple question. They are asking simple question. Chalo theek hai. But this is also simple na? Correct. Now India's 40, India's is super easy question. This so you can do by own. An entity own a two-story building, floor 1 is rented out to an independent third party under operating lease. So the floor 1 is what? Investment property or PP? Investment property, because it is lent on what? Operating lease. Floor 2 is occupied by entity admin and maintenance staff. Then what? Property, plant and equipment. If you remember, we have done dual use property. So if the portion of the asset can be sold separately or can be given on finance lease separately, then we need to apply separately. So flow 1 from the information, I think it can be understood that can be separated. However, no information has been given. So flow 1, if suppose it can be separated, flow 1 will be and flow 2 will be in day 16. Correct. The entity can measure reliably the fair value of each floor of the building without undue cost or effort. This is means they can find out fair value. How the same will be classified and presented in the balance sheet as per relevant Ind AS. What will be the accounting treatment as per relevant Ind AS on initial for the investment property, initial recognition at, subsequent recognition at, cost model as per Ind AS 16. Investment property, initial recognition at cost, subsequent recognition at cost model or revaluation model, whichever is opted by entity. That is given. हो गया ना खत्म. This is तो लड्डू. Ind AS 8 and Ind AS 35. Once again, interim financial statement. This is also one question of theoretical question. You can do it by your own. Means they want to. Let's read. While preparing interim financial statement, you will give me the answer. Suppose this question came, how you react. Let's see. Let's see. I will not say because it might happen we have not given focus on this concept in class, because there are some questions which you can do by your own if you become CA. If you think that you are chartered accountant, you can answer. Let us see. While preparing interim financial statement for the half year ended 30th September, an entity note that there has been an under accrual of certain expenses in the interim financial statement of first quarter. Means error. The amount of under accrual is assessed to material in the context of interim financial statement. Means it was material in the context of 6 months. However, it is expected that the amount would be immaterial in the context of annual financial statement. However, it can be immaterial as per the context of annual financial statement. Now, what India says is that only material error require retrospective restatement. Means if the error is immaterial, you can ignore retrospective restatement as per India said. The management is of the view that there is no need to correct the error in the interim financial statement, considering that the amount is expected to be immaterial from the point of view of annual financial statement. Whether the management view is acceptable, what do you think? No, it is the interim financial statement is separate. So we should find out materiality. We should find out materiality from the context of what? Interim financial report only. Then if you want to do as per the context of annual financial statement, why you are preparing? Don't prepare only. I will say don't prepare. It is not mandatory na. So, mata kharam. Chalo. I think this type of question though you can attempt by your own. Even though we have not discussed so properly in class because India 34. Chalo, theek hai. Okay. But all the questions we have done, what do you think? RTP question was easy or complicated? India's 12 question was good. Apart from India's 12 question, there was no such question which where you can't attempt by your own. India's 12 also you can attempt, but if you can revise that chapter properly. If you revise India's 12, that question was also easy. If there is error that we can ignore India's 12. But apart from India's 12, can I say all questions were easy only? What do you think? What do you think? What is your comment? Whatever is your comment, just write down in the comment of YouTube video whether the RTP questions were easy or not easy. I'm waiting for your comment. Correct now. And which question was complicated? Correct. And if you are finding any difficulty, you can write down in the comment box. I will come out with a video of that. If you are finding any challenge in any type of questions or any concept, you can write down in the comment box. We'll come out with that video and you can listen that video for your better understanding. Correct? Understood? But with this much only. Correct? Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Tomorrow means what? Whenever I'm coming with the new video. Bye bye. Take care.